Have you heard about ETFs? Well, if you haven't already, these are some great instruments to make great return in the stock market without doing much. So in this video, I'll explain why ETFs are great instrument to make easy money, or you can call it passive income also. What are ETFs? ETFs are basically investment funds traded on the stock exchange, similar like individual stocks, but they're designed in such a way that they track basket of stocks, commodities, bonds, and basket of different asset classes. Now, I'm going to talk about 8 reasons why I like ETFs, and then after that, basically I'm gonna choose the 3 ETFs that I like the most. Now, number 1, I like ETFs because of the diversification, and that's a good reason. For example, if you look at the S&P 500, you can basically pick an ETF for that, and that basically cover the 500 largest publicly traded stocks. Number 2, liquidity, and ETFs can be bought and sold like a stock. So if you sell your ETF today, you can get it within 2 trading days, that remaining funds. So it's relatively liquid rather than like a mutual fund or other forms of asset classes. Number 3, ETF is very transparent because at any given day you can tell the assets that make up that particular ETF. So you can always go on the website and check on that. Number 4, cost efficiency. ETF is relatively cheap to buy into because it's not like you have to go to a hedge fund, pay high fees. They already show you the basket of stocks that are different asset class that is traded on that particular ETF. You just go on, once you have a brokerage account, you just buy into that ETF. You don't have to do nothing else. So it costs you less money than like a mutual fund and other forms of index investing. Number 5, the ETFs, some of them pay dividends like regular stocks also, so this is good. Number 6, ETF provide a flexibility in how you can choose your particular investment options. So you have different types of options. You can buy a pharmaceutical ETF. If you want, you can buy one for bonds, or you can buy one for stocks. It all depends, but I'll go into my favorite soon. Number 7, tax efficiency. Now, ETFs can be a way that you reduce your tax payment because of how it's distributed, and unless you sell, you pay a capital gain tax. The 8th reason why I like ETFs is a trading flexibility. Now, just like stocks, it can be bought and sold, so it's pretty much flexible, like buying one stock. No, my favorite ETF is QQQ. No, this is an ETF that trades the Nasdaq 100. So this includes the largest domestic and international financial companies that's traded on the Nasdaq stock exchange. Now, over the last 20 years, the compound annual growth rate for this ETF has been 13.4%, and for the last 1 year period, it has been up 48%. So I like this ETF because what you find is that is a lot of technology company on this ETF, and tech is where a lot of the most profitable companies are right now. So I like this ETF because once the market is up and going, you'll make a lot of money through this ETF. Now, my second favorite ETF is the Vanguard S&P 500 ETF, traded under the ticker symbol VOO. Now, this ticker symbol captures the 500 largest publicly traded companies in the US market, and this is a way to capture some of the fastest growing companies, which is good. Over the last 20 years, this ETF has compound annual growth rate of 11.3%, and year to date it's over 17%, which is very good. Now my third favorite ETF is the Vanguard Dividend Appreciation. It trades under the ticker symbol VIG, and this ETF focuses on the companies that grows their dividend over a period of time. So you find that you have a lot of heavy dividend payers in this ETF. Like the good, I have to mention the bad about ETF. Now, ETF does carry the same risk as the stock market. No, so if the stock market is falling, you will find that some ETFs are the particular one that is affected by the stock market will fall. Now, if you find that technology stocks are falling, you will find that the technology strong ETFs will fall heavily too. So that's one thing to bear in mind about ETFs. ETF does carry the risk of the overall stock market, but you know that the stock market over the long term has produced good results, an average around 10%. But you do have years when or months when you will have the stock market falling, and similarly the ETFs will fall. And when the stock market is doing well, you can find that this will affect the ETFs also, and they will also benefit from the stock market performance. Now, I'm going to mention some other ETFs that you could also look into. For example, you have the bonds ETF. You have also thematic ETFs. Like sometimes you have some popular investment managers, they have their own ETFs. For example, you have like the ARK Innovation, which is led by Cathy Woods. This ETF is up over 40% over the 1 year period. This is also good. Now you have the real estate ETF. I find that these ETFs doesn't really perform so well in the stock market. So the real estate investment in the stock market haven't really performed so well, but year to date it's up 1.3%. Now you have like this SPDR Gold Shares ETF also, and this ETF tracks the gold. So this is another option for you if you want gold, but it's not something that I personally put my money in, but it's there, so I'm just letting you know. And there are many more ETFs. You can do a Google research and you'll see the many options. Now you can comment and let me know which ETF is your favorite, and let me know why. So stay tuned and look out for the other videos that will be dropping soon.